for over the last few months only. So, just to give you a start and let you know that what BOK has been doing over the last few months. Starting with this year, which is 2025, अगर आप BOK की थोड़ी सी history में जाएं तो BOK, of course, we are under the Provincial Act of KP, and our head office is based out of Peshawar. We were actually running two separate institutions. One was conventional banking and one was Islamic banking. And as a strategy, the board decided, and there was हमें पता है, the Central Bank of Pakistan has also been encouraging the conversion of the entire banking industry into Islamic. So I think this was a fundamental change and a policy decision that we decided, the board of directors decided that we are going to convert the entire bank into Islamic. So as a result of that, when we announced in February that we are going to be converting the entire bank into Islamic, we reorganized the institution. And I think that was the key fundamental change. By reorganizing, there's no science in this. You all know the way commercial banks in the country are running. There was a reorganization of retail banking, there was a corporate banking, SME, all the businesses. Of course, we have back offices as well, but we created one retail bank, one corporate investment bank, one commercial SME. Of course, agri is a part of it, microfinance is a part of it, and consumer is also a part of it. So consumer is a part of retail. So this reorganization was a fundamental change, and I think it has also helped us the way you have seen our results, and of course we'll come on the results later. With this, there was an induction of quite a few senior people, and we have been hearing in the market, and I'm sure all of you would also be thinking that there's a lot of challenge in getting good human resource in a place like Peshawar, but believe me, the type of management which we were able to seek, and I have the entire management sitting here, the people who have recently joined as well. They are all well experienced. They've all worked in different markets. They worked in Karachi, they worked in Lahore, they've handled Islamabad. So that way we were able to fill all these positions with one of the best management in the country. So with this reorganization, there have been a lot of developments. There has been a lot of work on various initiatives. And of course, these initiatives have all helped us in achieving whatever we have achieved so far. And we continue, We are not stopping here. We continue to come up with new initiatives and new creativity, which frankly was not really present in the institution. So when you are at that level, जब आप उस low level पे थे, so there is obviously a lot of room to develop, and there's a lot of room to come up with and compete with the market. ये जो आप slide देख रहे हैं, I'll just go through 2-3 slides before I will ask our CFO Irfan to comment on the financials. But of course, जिस तरह मैंने आपको बताया, conversion into an Islamic bank was the fundamental decision. And right now, till now, frankly, June 30th tak, we had converted 36 branches, 36 conventional branches into Islamic. But as we speak today, as we are sitting right now, we have already converted 59 conventional branches into Islamic already. And the target for the complete conversion is next year, December. We want to, and that's what we have also submitted to the Central Bank of Pakistan, and we continue to progress on that. In fact, we are a little ahead of our target, but inshallah, the way we are working, the way we are going, we will be converting the entire bank into Islamic by December of next year. While creating retail bank, the idea was, and I'm sure all the intelligent and all the well-educated analysts are sitting here, the first and the foremost thing which we started working on was our deposit mix. And, our deposit base, everybody's been saying that, of course, yes, largely it's tilted towards the public sector. But at the same time, as a policy, we started embarking on this strategy that, look, we need to target the private sector now. We need to go into private sector. Of course, we are not saying that we are not going to work with the public sector. We are obviously going to work with the public sector as well. But the emphasis is also now embarking upon private sector. So there's a lot of there are a lot of initiatives on that front. We have just recently, because we didn't have an international debit card, so we've recently launched our MasterCard debit card as well. We'll have all these slides in the presentation as well, but the work on deposit base, the work on deposit mix is our top priority. And mashallah, already we are working on it. And since the beginning of the year till half year, we have achieved quite a bit of success. Structural organization, I've already told you, but at the same time, we felt that there's a lot of process re-engineering which is also required. And within the process engineering, you need to have a robust IT system. And we have a world-class T24 with us. And at the same time, we are upgrading our IT systems, we are upgrading our hardware, we are upgrading our storage. So there's a lot of work, which has come a long way over the last 7-8 months, and inshallah we will continue to see positive results going forward. At the same time, with corporate banking, the strategy has been asset growth, of course, getting into aggressive growth outside KP as well. Our presence, of course, largely within our network, where we have almost, my branches or sub-branches, we are almost at about 285. And we'll be opening, inshallah, we are working on additional 20 to 25 new branches within this year, which to khul bhi gayi hain. But we are now also trying to get into other urban centers, whereby we feel that we need to grow our exposure in a place like Karachi, where that's the business hub of the country. Similarly, Lahore, Faisalabad, Multan, we have to work in Punjab as well, because we all know that you have to work in Punjab and Karachi, in order to grow your book. KP mein, there is a serious potential for us to grow in SME. There's a serious potential for us to grow in agri. We are working on agri as well all over the country. We are getting some new people on the consumer side. The way the interest rate scenario has been, we are now concentrating on consumer bank. Our current exposure on consumer would not be very large, even vis-a-vis our peer banks. But we have a strategy now. We are going to be coming up with a full-fledged consumer bank. So all these initiatives are there. And once you go through the presentation, of course, we'll be ready to take all the questions from all the analysts. Rather than me, telling you more and more, I would leave it to Irfan now, so that Irfan can go through and take you along the presentation, and then whatever questions you have regarding any of the initiative, any of the area, we'll be more than happy to answer. We have the entire management with us. So Irfan, without any delay, I think we should continue.
Thank you very much. Thank you very much, Farhan, for giving me an opportunity to present the numbers. But before I go to the numbers, one important thing, if you go to the next slide, please. There is, and one more slide. There is, this is something which I wanted to start with. Alhamdulillah, BOK has been upgraded, and now it's a AA category rated bank. That's a big achievement for the bank. We've also given a historical perspective in terms of the rating, and you'll see in 2010 we started out with A-, and now Alhamdulillah we are standing at AA-, and in last 5 years only there are 2 rating updates which we have achieved. So with this, now I'll go straight to the performance highlight from the next page. Okay, so the performance, Alhamdulillah, has been phenomenal. If you look at the number of profit before tax, there is 107% growth in PBT, and we have achieved 7.194 billion before tax profitability. So by all means, an extraordinary performance by the bank. Similarly, after tax profitability has gone up by 117%. Last year we had 1.5 billion profitability. half year 2024. This half year, we have achieved 3.365 billion. So again, an extraordinary performance in terms of PAT as well. EPS from 1.34, it has gone up to 2.91. Return on assets, return on net assets. I mean, we can see there is a substantial growth. Return on net assets has gone up to 30.05% for the half year. This is annualized, and similarly, annualized return on assets is 1.34%. So, in a nutshell, an extraordinary performance for the half year. Now I'll move on to the details, and I'll be giving you the snapshot of the profitability, and there's the profit and loss account. I've given a comparison with last year, 6 months, and the current year actual results are there. So starting off on the top line, net interest income has grown by 28%, which is in rupee term, it's 3.16 billion. Again, a healthy and substantial growth in terms of NIM, and it is because of 2-3 factors which I would like to highlight here. Is the reduction in cost, increase in volumes, and deployment of assets where we have achieved better NIM as compared to the last year. So that's the snapshot of net interest income. Similarly, non-markup income, well, this includes the net gain on securities, which was 1.49 billion. But even if we take it out, there is also increase in our fee and commission income, which is also one of our targets, that we want to not only increase our net interest income, but also work on the non-markup income. So that has also registered an increase. So overall, non-markup income stood at 2.4 billion. Last year, it was 893 million. So, and in terms of expenses, pretty much within the industry, I would say benchmarks, there is an increase of 14%, which translates into 703 million in terms of increase in expenses. So overall, if before provision, there is an 83% growth in our income, which is translating into 2.9 billion year-on-year increase. Another important area where we have been working was the recoveries, and Alhamdulillah, through concerted recovery efforts of the management, we have been able to achieve the reversal in the provisions and the ECL charge by 618 million. Last year, it was an expense of 108 million. So we have reversed the trend, and in the coming slides, I will also show you how our NPLs have come down as against the historical numbers, where generally there was an increasing trend. So overall, as I said earlier, profit after tax is 3.3 billion, which translates into 117% growth. So next slide, please. So I'll just touch upon, this is the balance sheet, but I'll just touch upon some of the key numbers, starting from investments, which has increased, and this is a December and June 25 comparison. There's an increase of 68.9 billion in our investment portfolio. Advances have come down by 21%, but as you know that the overall industry was trying to beat the ADR numbers, and because of that, we also tried to build our portfolio. So that dip is because of that. On the deposit side, Alhamdulillah, we have surpassed the industry growth number for the half year, and we are 38% in growth in terms of the deposits. So overall, if you look at the balance sheet, I mean, in the total assets, a 12% increase. In net assets, there is a 6% increase. So balance sheet even showing strength and showing a good quality. And I'll also touch upon certain numbers going forward as well. Next slide, please. So advances, we have already touched. NPL, if you see net NPL to net assets on the right side, top graph, in December, we were 2.55, and now it has come down to 1.49. So it is showing a strengthening of our balance sheet. And obviously, it is because that our NPL number has also come down, and because the coverage we have achieved already, that is also reflected in this. Non-performing loans, as I said, have come down, and the number, if you look at the left lower bar, 13.3 billion was the number in December 24, and in June it has come down to 12.48 billion. As I said, this is actually showing the increase in our balance sheet strength. Provision is also, alhamdulillah, quite adequately covered, 12.13 billion as against the NPL number of 12.48. Gross infection, because there was a decrease in the overall advances number. It's just because of that, but overall good thing is that our NPL number has come down. And similarly, net infection is also down from 0.38% to 0.3. Next slide, please. This is just a snapshot of how our portfolio is currently positioned. Hassan Saab has already touched upon that we are working on all the segments, maybe corporate, SME, consumer, and Alhamdulillah, you'll see that going forward there will also be a growth in this area as well. So, but this is the snapshot as of June 2025 for the information of the analysts. Next. Okay, this is another important slide. As I earlier mentioned, historically, if you see from 22 to 23, there was an increase in NPL by 1.5 billion. Then we moved to 2024. There is a slight increase, but still there is not a dip. But in these 6 months, Alhamdulillah, there is a dip of 818 million. So a very good and healthy sign in terms of the overall balance sheet strength of the bank. Next, please. Moving on to the deposits, our focus is on increasing the private sector deposit, and obviously being a government institution, we also capitalize on the public sector deposits. So if you look at the private sector deposit number in terms of percentage, there is a 32% increase, which is quite a healthy increase, I would say, from 128.6 billion. We have gone up to 170 billion. Yes, there is also increase in the public sector deposit, and it stands at 211.8 billion, which is reflective of 42% growth. Current deposits is another key and focus area. Current deposit as of June stood at 89.78 billion of the total deposit. It is 25% growth, which is again showing a healthy increase in our deposit. CASA, although in terms of percentage, it is showing a decrease, but if you look at the rupee number, it has gone up from 208 billion to 275 billion. So again, a positive and healthy growth on the deposit composition side overall. In next slide, we're just trying to highlight, because Hassan Saab initially touched upon that we are moving towards Islamic banking side, and this is also reflective in our deposit recomposition. In December, we had about 68% conventional deposit. Now, in terms of percentage, it has come down to 52, and Islamic, which was 32, has increased to 48%. So this is aligned with our overall strategy that we are now converting our portfolio towards Islamic, and as just Hassan Saab mentioned, that we are going, alhamdulillah, in line with our targets, or rather a little ahead of our target in terms of the conversion of the branches. Moving to the next slide. This is a snapshot of what we have achieved in terms of conversion in the first half year, and we have also given a province-wise breakup of the conversion of branches. So overall, 36 branches by the end of June have already been converted. Next, another important slide, and again, alhamdulillah, showing a very nice and comfortable position in terms of both capital and liquidity ratios. We have also shown what is the requirement as per the regulation. So you can see that CAR, which stands at 21.2, very comfortable position. Similarly, leverage ratio, LCR, NSFR. So overall, all these ratios are in a comfortable zone. Next, we've just given a snapshot of the historical numbers. I mean, I think the top two numbers are reflecting what we have achieved in these 6 months, and in terms of return on average assets, return on net assets, and return on overall assets. So overall, all the indicators are showing positive direction, positive movement, and this is just for the information of the analyst. And if they want to have any discussion on that, we can have. Last slide is just giving the book value. The next one. Yeah, this is just a comparison of where our book values were on different period ends and what are the market values, and also showing the market value as of September 16. This is also just for the information purposes. In the end, we have given a snapshot of the management team. Hassan Saab has already touched this area as well, so I will not go into much of a detail. So That's it from my side. I think I've covered all the key areas. Over to you, Farhan.
Sorry, Farhan. Before we give it to Farhan, just to add, and before you start, before the analysts and yourself, whatever questions you have, we are ready to answer. You know, as a result of what we achieved during half year, you know, it was. I think it's important to mention here that it was the first time that BOK actually declared an interim dividend. And that was the first time the company has seen it, and the board of directors decided that, look, you know, I mean, looking at a car and looking at a ratio and whatever we have achieved, and hopefully, inshallah, we would want to continue with this policy. This is the first time we have done it, and mashallah, the performance is improving every day. So, inshallah, we shall be able to continue with this. So, over to you, Farhan. You know, whatever we have.
Sure. Thank you, Hassan. Thank you, Irfan. We'll now open the session for Q&A. Just a few housekeeping rules. If you want to ask a question live, you need to use the raise hand button on your screen, and we will unmute you and you can ask your question. Alternatively, you have the option to put your questions in the chat box. We have a few questions in the chat box. First question is, what are your yields on advances and investment at the moment? And what is the duration of your overall investment portfolio?
Should we address the investment first?
Sure.
Should I do that?
Yeah.
Overall, our average yield on investments for the 6 months has stood at 12.8%. So that's a pretty good yield which we have achieved in these 6 months. So this is the yield.
Advances.
And what about yield on advances?
Advances, it's 13.16 for the 6 months.
Okay, and can you also share some details on the duration of your investment portfolio, the current duration?
So in terms of the rate defixation, it's about 0.3 years. And if you talk about the contractual maturity, it's about 3 years overall.
Okay, thank you. There are a couple more questions. What is the outlook for advances and deposit growth in 2025 as a whole? And your views on the interest rates in the near term?
Again, assets point of view, let me give you a brief on the assets, and then of course I'll ask Salman Saab, our country treasurer, to come in and give you a view on the interest rates as well. But as far as the advances are concerned, you know, we continue to grow, Farhan. We are not looking back because our base was so small, and as you have seen already, our breakup of the gross advances, whether it's on the corporate banking side or SME side, we continue to grow. Even if you look at our number today, it will be definitely more than what we have seen on the screen, because today we are sitting on 17th, 18th of September. So we are continuing to grow on the advances side, corporate, SME, and now we are going to be putting a lot of emphasis on consumer bank as well. So with consumer coming in, where our exposure is pretty negligible vis-a-vis the market, there is going to be substantial growth. Maybe, I mean, by the end of the year, I think booking another 15-20 billion is, frankly speaking, already on the cards, because these are limits and these are advances which are already approved. They are within the documentation stage, and we continue to grow with that. And we are not going to stop, because you see, we have a lot of room in our balance sheet. So unfortunately, we've not been very active over the last few years on the advances side. But now and of course, with the guidance of the board of directors, we continue to have this strategy of growth. On the interest rate scenario, Salman Saab, if you can just give a brief to the question which has been asked.
Sure. Thank you, Farhan. I think if you look at the market itself, there is room for the interest rates to go down. The last two monetary policies, State Bank has been following a very cautionary approach. I think flood also contributed towards that. Otherwise, we would have seen a slight fall in the discount rate as well, considering where the inflation is, considering where the core is standing at. And of course, on top of it, last night, Fed also decreased their interest rates by 25 basis points. So the gap has widened between our interest LIBOR and the Khyber. So the room to cut is there, but I think it is a more precautionary kind of an approach that State Bank has taken, flood being one of them. Now flood, as disastrous as it is on the economy itself, also brings in some good news in the sense that it does hurt the wheat and the sugar crop at this point in time, but the land gets refurbished in the sense that we have seen historically as well that the next crop then becomes very healthy. So I expect in time to come the food inflation to go down, and the room to cut the interest rates will start to creep back in again. So on a short-term horizon, I think we're looking at these levels for the discount rate to remain in place. And maybe January onwards, room to cut will start to come back into play again.
Thank you, Salman Saab. Okay,
Yeah.
a few more questions related to you, Salman Saab. This is a question asking about the fixed portfolio duration and the yield on it, and any repricing in the rest of the year.
The strategy that we've been following, and since I have joined, keep in mind that we're going Islamic. So I don't want to be pregnant with an investments on a long duration fixed instrument. So we were following that strategy, and come end of the year, we will have almost negligible, maybe about 500 million of fixed instruments. Rest of it all either matured or sold in the market itself. Because my experience has been on the conversion of Islamic Bank, and I don't want to land myself at a point in time where I go into a fire sale situation. So as we walk into 26, we'll be very comfortable. So most of them are floaters, and bulk of the investments now being switched to Islamic mode. So moving away from the conventional as smoothly as we possibly can. So just to recap, I'll have a very negligible amount of fixed instrument starting January 26.
Okay, thank you. A few more questions. Okay, there's a question on, given the floods that we were talking about, there's a question about the portfolio in agri and downside risk the bank sees from the recent floods in KPK and Punjab in particular. So maybe Hassan, if you want to sort of give a more of a strategy view and a big picture view on that.
Agri portfolio, as far as we are concerned, frankly speaking, is not very large. It's almost between 4.5 to 5 billion. In the overall scenario, it's not a very large number. And yes, unfortunately, we have seen floods in KP and in Punjab. In KP, there were particular areas where it has been affected, but the government of KP is coming in. They are pitching in. They are helping the agri side as well on their own as well. We are also talking to them. We are trying to create some and come up with some initiatives for the agri market. But in the overall scenario, 4 to 5 billion is not a very large number for us. In fact, we have a strategy going forward that, we are going to be actually looking at growth on the agri side. And for, going forward over the next few months, you will see that our exposure will increase. We are not very large in Punjab. Again, not very large in KPK, in KP, vis-a-vis other banks. So our strategy is very clear that we want to do agri, and we would continue to do agri, and we would grow on the agri side. when floods come in, Farhan, of course, crops are affected and there's a lot of negativity. But then there is a positive side as well, because for the next crop, believe me, there's going to be better fertility. And, already people have started talking about it, that look, for the next season, maybe the crops are going to be even better. So, there's, of course, I mean, I'm not saying if floods, floods is not something very good, but it's a positive impact over the time bhi aata hai. But as far as we are concerned, we are not really exposed to that level. And हमारा कोई ऐसा portfolio का उस तरह impact नहीं हुआ. And inshallah, going forward, you will see a growth in our agri portfolio. We want to do agri business and support this sector in the country.
Okay. The next two questions, I combined them. I call them tricky, and they're both sort of addressed to you in a sense. Obviously, you talked about the payout being the first interim payout that the bank has made. There are a couple of questions related to that. I mean, one question is, can we expect a quarterly payout? And the second one talks about broader dividend policy. So maybe I combine that and you can answer if you could.
This seems to be the most important question, I feel. But dekhein, this is the first time, as I already quoted, I have already said that this is the first time the bank has actually come up with an interim dividend. And like, for example, our last annual dividend 2024 was 1.7, and only in this half yearly dividend was 1.5. So this word policy, is a different thing for a public sector. Policy hai ki ji dena ya nahi dena. I am pretty sure that we are going to continue with it. Board of directors are there. They also feel that yes, we should be sharing our earnings with the owners, with the sponsors, and that's exactly what we are going to do. With whatever we have, as far as our CAR is concerned, as our other ratios are concerned, there's a lot of room. So frankly, I can't give you a number on this, but the way we have done it this time, our policy or our standard should be anywhere between 50 to 60% going forward as well. Agar aap kama rahe hain, so then you have to share it with the sponsors as well. So I'm pretty sure, and we have had this discussion at the highest levels, and the sponsors have been very happy. This is the first time it has been done, and it will continue, inshallah. Whether it's quarterly or semi-annually, or annually, I don't think that मैं उस पे कोई ज़्यादा कह सकता हूँ, but yes, the way we will continue with our dividend policy, and by sharing our earnings, and by sharing our results, by sharing our revenues, sharing our earnings with the investors.
Thank you. Okay, two other questions. I would link them. I mean, they're sort of addressed towards Irfan in a way. One talks about earning sustainability, given Treasury has been a major chunk. I guess it's across the board. So there is a question on that, and linking to that again, because it's profitably linked. They're talking about the removal of the MDR that happened earlier. That's helped. So there's a question asking how much has the removal of MDR on deposits helped the overall profitability in the first half?
Let me just answer the deposit part first. You see, fine. I mean, MDR, I think that's a very valid question, Farhan. And if you look at our deposit mix, it is tilted towards the government sector as well. And there's no doubt that it has been beneficial for us. The cost of deposit obviously has come down. The difference, of course, is around 1.5% or 1.75, whatever the differences are, because every bank has a different rate for non-MDR accounts now. It has definitely helped us. But, we are, on the other hand, primarily, our priority is to work on the deposit mix. So we, as a strategy, if somebody has, looked at our balance sheets earlier, our cost of funding was very high. So, we as a strategy have been, shedding high cost deposits and shifting towards the lower cost. So that high cost deposit strategy, there has been a lot of work behind it, because in order to lose a deposit, होता ना यार number नीचे आ जाएगा, but we cautiously did it, and we did that by knowing कि यार हमें एक मुश्किल पड़ेगी, but we have been able to do that, and our cost, we had deposits, government के भी थे, कुछ private के भी थे, they were 1 year and they were very high cost, which we have shed, and अभी भी थोड़ा सा पड़ा हुआ है, which we are very clear on that we are going to renegade and we are going to shed those deposits away. So it's yes, again, coming back on the question, MDR has helped us, but our strategy is very clear. We want to improve on the product, on the deposit mix. We feel that we need to improve our CAR, we need to improve our current accounts. For current accounts, we need to go into businesses as well. The more and more we get into businesses, there will be going to be more, and you will see some initiatives coming in over the next few weeks, where we are also going to be advertising. We are going to be coming up with a current account campaign as well. So that is where we are emphasizing more, that we have to improve on product mix. I also saw another question on the screen, that what kind of a deposit would you close on maybe at the year end? We are growing. But again, we want to improve our product mix. We improve our product mix, we improve our CASA, we'll be able to make better revenues, better margins. That is where our priority is going to be.
Okay. And if I ask you in terms of, I add my question, I mean, can you sort of give us a view? I think your current accounts at the moment are about 25% of the total portfolio. Where do you see as a strategy, maybe on a 3-year basis, where do you see the mix heading in terms of your strategy as the CEO?
I would like it to be 100%, which unfortunately might not be the case. But on a year-on-year basis, yes, we ideally would want to be, minimum somewhere around 35 to 40% over the next 3 years, because we feel that the way we are growing, the way we are doing it, hopefully we should be able to achieve that. Because we have come from a far lower number.
Okay. We have one more question here about net interest income. I mean, I think it's a difficult one to answer, in the sense that this question says, can we expect net interest income of 4.5 to 5 billion in subsequent quarters, as we witnessed in June 25 quarter?
I think I would just carry it forward from what Hassan Saab has said. I think it is important, rather than giving any futuristic number or any confirmation on the future numbers, I think it's important to understand that the bank is working on a strategy, and the results are reflective of implementation of that strategy. And we, inshallah, will continue with the same strategy. As Hassan Saab has said, that the focus is that we increase our current account, we improve our deposit mix. And this is I think one of the fundamental areas which can obviously improve the future performance of the bank as well. So I think it's important to appreciate the fact that we are working on a strategy, and alhamdulillah, with this strategy going forward, we do expect that our performance is going to be on the same pattern.
Okay. One last question that we have over here. This is for Usmani Saab. I think we've discussed it, but we keep getting this. This is a question about the breakdown in the investment book, and more specifically, they want to ask you what is the spread on the floaters which you are carrying in your book at the moment?
Well, the margin is very healthy, because, like I said, I've been sort of tanking up the book since last year. And if you look at the cutoffs and the spreads from that point onwards, so it is a very healthy spreads. That's all I think at the moment I would like to share with everybody, because I'm sure they must be looking at the cutoffs. I'm sure they're aware of the fact as to where the spreads were earlier this year, or the last quarter last year, and where the spreads are sitting at this point in time. So having said that, these are healthy spreads, because the cutoffs has been on the spread side of it has been decreasing as we move in. Yes, but I think you need to dovetail that question, what was asked earlier as well, i.e., are we expecting a high interest income? I think it is a question that comes with the fact that when you had interest rates at 22%, of course, the interest earning was high, so was the interest expense was high as well. I think the trick is, as the interest rate goes down, of course, that quantum number needs to decrease. So does the expense side of it. So it's not about an absolute number of how much interest income that one is going to create. I think it's a question of what kind of a margins can we protect as we move into a lower interest rate scenarios. It's that where we are all focused as BOK, is to protect the margin. At the end of the day, I keep on saying it, we are in the margin business. If we can protect that, we'll have a very healthy return on asset or return on equity.
Thank you. We don't have any further questions. While we wait for questions, Hassan, I had a few things that I wanted to ask you. And I think some of the things you have touched upon. Firstly, obviously you touched upon earlier about, focusing on SME and consumer and areas. Can you sort of elaborate a little bit about what that strategy is going to look like? How do you think you can enhance that portfolio? Maybe a broad sort of view on that. And there's another question that I had. Maybe you can also sort of highlight a little bit on your digital strategy. So those are the two questions that I would like you to answer.
Farhan, as far as SMEs and consumer is concerned, our exposure is not very large at all. And there is a serious room for growth for us, not only in KP, but all over the country. We have not really been very active in places like Karachi and in Punjab all over. But now as a strategy, over the last 2-3 months, we've been adding people, we've created teams. When I spoke about the reorganization, there was no focused SME banking earlier. So when you're focusing on a particular business, of course, then you're concentrating more. And we have seen that the growth is already there. Even right now, there are 1.5 to 2 billion worth of assets which are in the offing, and the documentation is in the process. Yes, there is with so much of room, I mean, even if we look at Punjab, you are talking of areas like, of course, Lahore is there, then Faisalabad, Saibal, Sialkot, Sargodha, Multan, Gujarat, Gujranwala. These are areas where, frankly, we have not been present. And now we are actually concentrating on these areas. We are actually opening new branches as well, concentrating out of KP. And there's so much of SME potential there that the room for growth for us is immense. Markets like Sialkot right now are actually flourishing. They're exporting, and they've all been, small SMEs who are now getting into, a proper commercial companies, and they would fall into the commercial categories, and then maybe, hopefully, inshallah, also grow into corporate. But for us, the potential is so much that there is, we just need the right people and the right strategy to go and market all these names. And with addition of portfolio on the SME side as well as on the corporate side, what we are actually concentrating and seeking is the ancillary business. You see, everything is attached with it. Higher trade volumes. There is serious potential for growth in trade volumes for us. Transactional banking. We have already launched transactional banking, whereby we are going to have a proper cash management system. We're already acquiring a new corporate portal. We are going to launch it very soon. So with cash management, that is also going to help us on the deposit side. It's also going to help us on the current account side. So this is all a part of the strategy, and it's a kind of an ecosystem within the institution, whereby one area is going to actually help the other. And there's going to be a semester, it is actually there are a lot of synergies which are attached to all the areas. On the consumer side, again, our exposure is far lower than any of the institutions. So there's so much of growth. Yes, we've had some challenges in terms of human resource, but we are adding a team. We are creating a full-fledged department within the retail bank. And with so much of growth potential, we will straight away go, if the analysts go through our website, we have all the products. We have finished that homework as far as we are concerned. We have all the products, whether it's car leasing or home finance or personal loan or advance against salary, everything. It is all in place. Now it's actually now time for us to go out and sell and market. The issue which we have been facing earlier was brand awareness. That is exactly why you see there's a lot of emphasis, there's a lot of importance which we are giving on our marketing side of the business, because marketing and brand awareness is extremely important for us. I don't know if some of you have seen our advertisements, but we have become pretty aggressive, whether it's on social media, it's on places like TikTok or Instagram. Of course, it's the world of social media now. But now I have been receiving calls whereby people say that, look, we have started seeing your advertisements. So, as a part of a strategy, there's so much happening. There's so much happening at all the ends that it's helping all over. So brand awareness is extremely, extremely important for us. So with so much of potential on SME, consumer, we just need the right people. We need branches out of where we are going to be working on SME and consumer. And there's so much of growth. Even if we are adding something like 7-8 billion, which is nothing for this market, we'll actually be doubling our portfolio. So you can actually see that what kind of an impact we are going to have if we are doubling our portfolio. And 7-8 billion, if I talk to the larger banks, 8-10 billion is nothing for them. So for us, these are large numbers, and they are going to have a major impact on our revenues. Major impact on our revenues. Digitization की जो आपने बात की, we have a full-fledged digital office in Islamabad. It's actually based out of Islamabad. The bank had decided about 3-4 years back that we are going to have a digital. Our digital team is going to be based out of Islamabad, and IT structure is also based out of Islamabad, because there was the feeling that in terms of human resource there are challenges to get the right people in Peshawar. So digitization पे बहुत इस वक्त काम हो रहा है. That is our major emphasis. You will see. Rather than explaining to you will see over every day that there's something new coming in, and all these consumer products we want to digitize. We want to make it simple for our customers. Master debit card was of course one of the initiatives which was delayed, but now we are on it. We are working on by the way, we are one of the few banks which has a digital debit card. We have a digital master debit card. So you can well imagine that what sort of emphasis we are putting on digitization. And, besides that, we are working on various products on digitization. We are adding people, and we are going to be, inshallah, definitely very, very active. Right now, we keep on receiving complaints that the app ka ye ho gaya, aap ka flana ho gaya, but slowly and steadily, one by one, we are addressing everything. And we have a full digitization team. We are adding more people based out of Islamabad, and you will see results, inshallah, coming up very soon. Very soon.
Inshallah. Thank you so much. So that's it. No further questions. Any concluding remarks for the analysts and the investors who joined in, Hassan, from your side?
मैं एक चीज और ऐड कर दूं before the concluding remarks. I was expecting a question कि KP के related कोई पूछेगा, which is basically home remittances business, and in case of home remittances, if you look at our overseas population of Pakistan, good 40-42% of the labor population is actually out of KP. And we have a pretty, robust and a pretty well spread network in KP, and home remittances pay we are really emphasizing a lot these days. And we've actually launched in February, March, we launched a product by the name of Core Pay. जिस तरह बाकी banks के पास, जिस तरह UBL के पास तेज रफ्तार है या Rapid है, Bank Nadeeb वगैरह सब, everybody is doing it. So emphasis on home remittances is again, is going to help us in the entire in the entire ecosystem, because when money is coming in, 20-30% be retained ho jaye, so your deposit book goes up. So there's a serious importance which is being relayed on home remittances, and inshallah we'll see that that is also going to help us eventually. जो आपका question था, to contribute towards our eventual NIMs. So, any other question? If we don't have any questions, otherwise, thank you very much for organizing this. Even if I would ask all the analysts if they have any other questions, even if later, if they want to send it to us, they can send it to the company secretary. We can give them all the answers whenever they require, whatever information they require. But we wanted to have this corporate briefing. We are going to have a regular corporate briefing now, hopefully, if not quarterly, semi-annually, definitely. And again, we are an institution which has not been very prompt as far as your market is concerned. But we want to tell the market that we are there. We are growing. We are working. We have a strategy which has changed. The board of directors are very clear on this. We don't want to be a bank which is not well known in the market. We are working on such initiatives whereby you will see that the customer base will get attracted. Yes, of course, we are KPK centric, and KPK may, of course, we have the largest network, but you will see that BOK is not going to be restricted to KPK anymore. We have to go out of KPK, and we are there. We have branches all over the country, but we are going to be growing our network. But again, just around digitization ki baat ki, digitization doesn't block your locations. For digitization, you can, from anywhere you can come in. So that is one area where we are going to be growing very well. And otherwise, expect good dividends out of us. We won't let the market down. We won't let the market down. Otherwise, people have board of directors and the sponsors are going to be asking us as well. So we are there to work for them as well, of course, to work for the benefit of the staff as well. The more we make, the more revenue we make, everybody will benefit. So we want to be in the market, we want to be there, and we would want to keep updating the capital market on a very, very regular basis.
Thank you, Hassan. Thank you everyone for joining. We wish BOK all the best in the second half of the year and hope this momentum continues. Thank you very much, and we can conclude today's call. Thank you.
Thank you, Farhan.